Thank you very much for that intro, I guess. Welcome everyone to our discussion on business of payments in Africa. Obviously a huge, huge market. My name is Jessica Hope. I run a PR agency called Wimbart. We work with a lot of payments companies across the continent. So, and as you all know, like fintech, you guys take up all the money when it comes to VC. I think even last week, Partech announced their VC tech report, and I think out of the 6.5 billion raised last year, I think 39% of it went to fintech. So it's a growing market as well. Payments are essential. Basically, I think they're fundamentally there to power all other tech aspects, because essentially if people can't get paid, what's the point as well? So this panel today, we're going to keep it really conversational, but basically we're here to absorb and draw on the expertise of this amazing panel. I'm going to ask all of the panelists to do a 30-second quick intro, and then we'll dive into questions on the panel as well, and then hopefully there'll be Q&A at the end as well if we've got time as well. So ladies first, Amandine, let's start.
Hi, good afternoon, everybody. My name is Amandine. I'm the COO of Paystack. Paystack is an African online payments platform. We are live in 4 different markets: Nigeria, Ghana, South Africa, and most recently, Kenya. We help merchants accept payments online via a suite of APIs. We also help them disperse payments to some of their beneficiaries. And we've been around for about 7 years. And I think maybe the only other big piece of news is that 2 years ago, we were acquired by Stripe. So we're now a fully owned subsidiary of Stripe, the US payments company.
Thank you very much. Kamami?
Good afternoon, everyone. Karibu Nairobi. My name is Kamami Christine Wichira. I'm a partner with Yele Pipe Africa. You know, you techies don't like lawyers, you don't like regulation, but guess what? We're actually here to stay. At Yele Pipe Africa, we're in 20 African countries and here to support you to do your business well.
Good afternoon, everyone. My name is Yele Oyekola, co-founder and CEO of Duplo. Duplo is a B2B payment company based out of Lagos. We enable businesses simplify the way they pay their vendors and suppliers, while also ensuring that these payments are automatically synchronized with their accounting software and ERP. We've been around for just over a year. We've raised over $5.6 million in funding, backed by YC, Tribe Capital, and We Capital as well. Glad to be here. Thank you.
Thank you.
Hi. My name is Idorenyin Obong. I'm the CEO of Gray. Gray issues US bank accounts to individuals and businesses. We're backed by YC. We've been around for about 2 years as well. Thank you.
Thank you. And Kevin?
Good afternoon, all. My name is Kigima-Ng'ang'a. I'm the East Africa country lead at Verto. We are a cross-border payments platform for businesses. Our mission is to simplify cross-border payments in emerging markets, particularly in Africa. And we do this by operating superb infrastructure that allows businesses to hold, collect, convert, and pay in over 190 countries. We are a YC-backed combinator company, and we essentially are able to solve all your cross-border payments in Africa and the world.
Excellent. Thank you very much, everybody. So let's dive into the first question. Traditionally, payment providers across the continent have built in silos, and this has resulted in sort of solution fragmentation and limited local and international interoperability. So I guess I'll open this to everybody on the panel, but how can fintechs collaborate more with each other to expand products and service offerings while leveraging their respective capabilities? Let's go.
Sorry, go
No,
ahead.
go ahead.
All right. So I think 2 things comes to mind. First is partnerships and acquisitions and mergers. So for partnerships, I'll give an instance. Gray, when we wanted to launch in Kenya and Tanzania, obviously we couldn't build those rails by ourselves. It could have taken us years to launch. So we had to partner with Cellulant. So that's an example of fintechs partnering with fintechs, just so that you can expand your product offerings as soon as possible. Secondly, even though founders don't like to talk about this so much, acquisitions and mergers could also help. When 2 companies, 2 fintechs come together, they could also go really far.
Okay, actually on the subject then of acquisitions, obviously Paystack was acquired by Stripe, so but what do you guys think of in terms of acquisition strategy on the continent, or what had you thought about?
For ourselves?
Yeah.
I think the first thing I would say is that the best companies are bought and not sold. So even for us, the conversation with Stripe was a very natural continuation of an existing relationship. They were already our largest Series A investor, and so we already knew the team very well, and it was just a very organic continuation, very mission aligned, very culturally aligned. In terms of Paystack growing inorganically, to be honest, we've considered it. There have been a few opportunities that have come across our desk over the last few years. I think the key metrics would be tech, team, licensing, merchant base, probably. But to date, there hasn't actually been anything that has been compelling enough for us to think it would get us to reach our mission faster than if we were to do it ourselves. And I think if we just take licensing as one of those 4 criteria, even if you buy a company for the license, you still need to go through the process with the regulator to actually change the name of the license holder, which in some cases can take as long, if not longer, than just applying for the license yourself. So you really need to trade off those opportunities. I'm not saying we're completely opposed to it, but so far we haven't felt compelled to grow inorganically. We've been able to grow by just expanding ourselves.
Okay, great. And then Yele, your thoughts on sort of fragmentation and what can be done?
So I think the first thing is we need to understand why businesses or tech companies don't actually collaborate. And the reason, when you think of the payment opportunity from a 10-year perspective, it's actually immense and massive. But on a day-to-day and a month-to-month and a year-to-year basis, growth can be very slow. So what you tend to see is a lot of founders start a business, focus on a particular niche, and then try to go broad. And they try and build new products. And what happens there is that they try to do this themselves because investors might find that more attractive or just pure ego. But I think the most important thing as well is the reason why we at Duplo don't tend to partner and just build ourselves is margin pressure. So as a B2B payment company, we're trying to help businesses pay locally and pay abroad as well. If we go directly to a partner, the margin is incredibly compressed and we can't make as much revenue. So I think that's one reason why these guys or fintechs don't actually collaborate together. But I think we can actually improve this by enabling open APIs for API-first companies. Also providing sandboxes as well for different companies to integrate with. And I think education is also very important as well. So why should I partner with you as a business? And just enabling win-win collaborative partnerships. So I think those are my thoughts on the question, Jessica.
Okay, great. And then from a regulation perspective, Kamami, what are your thoughts on it?
As you know, fintech is pretty much an emerging area, and many of the regulators are struggling to get their minds around how the regulation should work. And I think it's most helpful for fintechs to join up with the regulators so as to influence the development of regulation. Otherwise, they will find themselves in a situation where, you end up with regulation that just doesn't work. So Kenya recently, as we all know, has put together regulations for digital service providers. And I know that some of the larger digital providers have worked closely with the central bank in terms of trying to provide the support necessary so that the regulations are in a state that is actually facilitative of the industry rather than constraining it. And so I think the whole area of knowledge sharing and development of the regulatory framework is just an easy one for cooperation amongst the fintechs.
Okay, great. And then, so talking about regulation and then talking about risk as well, Kevin, I'm going to ask this question to you. Foreign exchange risk is got to be one of the big, daunting challenges faced by fintech companies, payments platforms as well. So how can local companies circumvent the risks associated with receiving local currencies from local customers and sort of remitting to satellite USD obligations, for example? Yeah. And what are the things that you've learned along the way? And I guess let's thread in also the regulation narrative as well. What do people need to be mindful of?
Yeah, thanks. So from an exchange risk perspective, obviously, Africa has traditionally had what you'd call illiquid currencies. So fintechs will always struggle. You have a fintech seated in Nigeria that has developers probably or partnerships in Kenya, and they can't be able to move money. But what we've seen, particularly, for example, at Vato, is we built a community where you have people with inbound payments. So you've got a global business that's looking to enter into Africa, and you've got a fintech business that's looking to expand out of Africa. So what we're trying to do is to help people mitigate that foreign exchange risk, is we try and help these businesses come together, because one is able to provide liquidity and the other one is able to provide the local currency. So that's one of the things we do to mitigate risks. We've built a community. We have a marketplace that allows that. The second thing that's related to the regulator is a lot of fintechs don't take time to understand the local regulations, and then that presents a problem when they're building their product. I'll give you a case in point. We have certain customers that are looking to build payment rails out of some challenging African countries that have some very strong regulations. However, what they do is they build a product without understanding the local context. So one of the things that we really encourage people to do is to understand that in this market, you can do A, B, and C, but you can't do D. How do you solve for D? You need to join lobby groups so that the regulator understands that these are some of the risks that we present. So one of the things we do is we also help people understand local context. And fintechs, please speak to specialists, because you can go to market and have your money stuck in very difficult markets, and there are people that can help you do that. So again, community is very critical.
So that's useful then. So Kamami, then from a specialist perspective, what would your advice be when it comes to business of payments and FX?
Jessica, payments are very sensitive for our country. And with the advent of all the technological platforms for payments, regulators are struggling more and more, because regulation tends to be geographical, and the whole aim of fintechs is really to break this jurisdictional barriers and go beyond. So in the near future, and we're living in very interesting times, because as I'll speak a little later, many central banks across the world are looking at putting out digital currencies as a possible solution to them then having greater control over the way payments are happening. But in the interim, I think we are where we are. Many of the regulators, as I said, are struggling to sort of put into place the regulatory frameworks. And as Kevin has said very clearly, it's important for those who want to play in this area to just align, try and get a grasp of exactly what the framework is, and then figure out and get guided on how to move forward. What I have generally found is that many of the regulators are a lot more accommodative than they were previously. They will sit down. I think you have said that sometimes people need to understand what can work and what can't. What we are seeing in practice is that there's a lot more, let's sit around the table, try and understand what you're trying to achieve, and work to develop a solution that works. And it's all moving very, very quickly.
Okay, so then, Idorenyin, from a grey perspective, obviously you work with US dollars, USD cards. What are some of the issues that you've had to deal with when it comes to payments and setting up and foreign exchange and USD cards?
Yeah, that's like a very difficult thing. But I think one of the things we've done right to avoid that risk is like hedging, where we are hedging like certain currencies so that when we have to do settlement, we don't have to incur extra cost of moving that money across borders. So I think that's like one of the ways we try to mitigate that risk by ourselves.
Okay, great. And then, so moving on then, so Kamami mentioned blockchain and e-currencies as well, and we've seen the growth of e-currencies. Obviously, Nigeria rolled out the e-Naira, I think last year or the year before, so that's kind of, hopefully gaining some momentum as well. But do you think that, with blockchain and with e-currencies, does it look like there's going to be a broad-based acceptance of cryptocurrency in the African markets, or is it still, not even day one kind of levels? Open the question to everyone, actually.
So yeah, maybe if I have a go first. I think that's the million-dollar question, exactly what direction things are going to go into. So just speaking about Kenya for a moment, I think we know the central bank in Kenya has come out clearly to say that, cryptocurrencies, they don't want the banks touching the cryptos. And so that's, whatever is happening in terms of cryptos in this market is not really, if I can say officially sanctioned, that's the proper word. And the situation is there are very few jurisdictions worldwide that have gotten comfortable around cryptos. Most of the jurisdictions are still eyeing them with a lot of suspicion, and sometimes for good reason, because they don't have the elements of control that you will see in a central bank issued currency. So enter the central bank digital currency, which I think the intention is to address some of the issues that arise from the cryptos. I think my sense is that what the central banks will be hoping to do with the digital currencies is to address some of the concerns arising out of the cryptos, and then obviously give them also greater control. The central bank digital currencies themselves, depending on the infrastructure that is developed by the various banks, then raise their own set of concerns around how monetary policy will be implemented, about privacy. I think there are significant privacy concerns because money will no longer be anonymous, and so on and so forth. So as I said, right now, we're in a very interesting space. It's an evolving situation. I think for any fintech, the e-Naira, you're right, is out in the market. I think Ghana has also issued the e-Cedi. The central bank in Kenya has come out clearly with a framework for the issue of a central bank digital currency. It hasn't yet quite hit the market. And I think it will be very important for anyone in this space, because the central bank digital currency will change the payment space once they go out. Now, in a country where M-Pesa is prevalent and everybody accepts it and understands it, it will be very interesting to see the uptake of these currencies in Kenya, and how the situation will unfold going forward.
Brilliant. And then, sorry, Karen.
Yeah, sorry. I think one emerging trend that we've seen even at a B2B level is e-currencies and cryptocurrencies are gaining a lot more prominence. Why? Liquidity to what you call access to the fiat, just to your earlier question, is becoming increasingly difficult. We've got global macro conditions that are affecting businesses' accessibility to hard currency. If I want to import spare parts or if I want to import products, I'm struggling to get that liquidity. But what is happening is a lot of the businesses are identifying that there is liquidity in stable coins. There is liquidity in crypto. So you're slowly seeing a lot more businesses thinking, not primarily because they want to actually use cryptocurrency, but they are looking for access to liquidity. And eventually, the regulator is going to have to probably face that head on, because if the regulator in its traditional fiat and monetary policy is not able to provide that traditional liquidity, the demand will always, I always say, the river follows its path. So where there will be liquidity is where businesses will go. And I think that's something that we need to be cognizant of. It's probably 2-3 years away, but it's something that's emerging.
100%. I was just going to say 100%. Just this morning, I was having the exact same discussion around the shortage of Forex specifically here.
Okay. So then, Amandine, then from a Paystack perspective, cryptocurrency, e-Naira, how do you deal with it? How do you deal with different payment platforms across different borders as well? Do you have different strategies for different digital currencies, or is it difficult to say one size fits all? But
yeah, I think, so the first thing I would say is by no means am I a crypto expert. I think there are people on the panel that are much more well-versed in crypto than I am. But I do think that it is still day one for us in terms of a payments ecosystem on the continent, and really just exploring all of the different use cases and the capacity and the potential of crypto. I think we also need to realize that digital payments is still nascent. I know M-Pesa has been around since 2007 in Kenya, but when Paystack started in Nigeria in 2016, for many people, it was their first time paying online with a card. In fact, there was so much customer education that needed to happen. People were putting their birth dates instead of the expiry dates on the checkout form. So that was just 7 years ago. Like, we are still very much in the infancy of digital payments in Africa. And I think similarly, in terms of the crypto trajectory, there's still going to be a lot of education that is needed. I think crypto is an incredibly powerful tool. I think it's here to stay, but I think we're still very much at day one. I think particularly for payments companies, as we think of cross-border. In an ideal world, a merchant in Nigeria should be able to accept M-Pesa from a customer in Kenya, and it should happen instantly, and they should be settled instantly. That's an ideal world, and I think that there is potential for crypto to get us to that ideal world, but I think we are still very much at the infancy. I think if we think of where we currently are, just doing SWIFT transactions or SWIFT payments across borders, even within Nigeria, SWIFT payments from a USD account to another USD DOM account is $30 for one transaction. So there are so many possibilities for disruption and for efficiency, and I think that is our responsibility as payments companies to be able to increase our value proposition to customers, but I still think we're very much day one.
Okay, useful. And then, so you mentioned M-Pesa. We're in Kenya. You can't have a business of payments or a fintech panel without discussing M-Pesa. And I guess, over the years, so mobile money has diversified its value proposition beyond just person-to-person transfers, cash-in, cash-out transactions. But what are some of the other emerging trends associated with mobile money, and how can some of the mobile money providers take advantage? Idorenyin, maybe we'll start with you.
Okay, so I think very recently we are seeing that mobile money solutions are slowly carving out into actual fintechs. They no longer just offer P2P transactions. They now offer bill payment, savings, loans. I think last year M-Pesa launched the Visa card. So we are seeing mobile money operators slowly being fintechs as well. So I think even those who haven't innovated to this point are actually thinking about it.
Okay, Yele, so I know that you're trying to build a cashless world, but for you, how do you view mobile money versus other sort of payment platforms?
Yeah, as a B2B payment company, we see, so the different payment methods. We have cash, bank transfers, check payments, and of course, mobile money. But what we're seeing with B2B is that it's more prevalent with rural areas, FMCG companies, and this would take a long time to actually change. But from a B2B perspective, we try not to change customer behavior. So in the FMCG space, for example, where we launched, cash was king when we launched. Customers we onboarded in the early days had about 80% cash payments. But over the last few months, we're seeing more digital transfers, digital payments, and of course, mobile money being one. In Nigeria, cash is king, bank transfers are king as well. We're still seeing, it's still very early for mobile money in Nigeria. So I think for us, it's not a play at all. But I think from a bank transfer perspective and card payments, I think that's, of course, coming up as well.
Okay, and then maybe, Yele, it's sort of on that point as well, you can kind of help give us a bit more background on, you focus very much on B2B payments,
Yeah.
what are the current methods, and are there any shortfalls that I guess you're trying to solve for as well? And then, I guess, could there be any transfer over to consumer kind of business payments?
Yeah, thank you, Jessica. So currently with B2B payments, we have 4 types, so cash, check payments, bank transfers, and mobile money. Last year, we launched a report that surveyed about 1,000 people. And what we saw that it's very different across different jurisdictions. In Nigeria, you have cash bank transfer as the main method of payment. About 60% of people actually pay with bank transfers and collect payments with bank transfers as well. 2 is then check payments. So that was about 11%. And then, of course, mobile money and cash. So for us at Duplo, we're just trying to enable businesses, simplify the way they pay their businesses through bank transfers and through card payments as well. But when you think of B2B payments, it's fundamentally very different from B2C payments. The decision maker is multiple people. You have to go through different approval levels and workflows. Invoices aren't standardized. So it's very complex. And what we're seeing is that businesses want to just focus on simplifying that process and also ensuring that these payments automatically reconcile with the accounting software and ERP as well. So the core for B2B is just trying to optimize and simplify the way businesses manage payouts, collections, account payables, and account reconciliation as well. But yeah, bank transfer in Nigeria, for example, is the most prevalent method. In Kenya, of course, is mobile money and bank transfers as well. Check, we're seeing a massive reduction in check payments across the entire continent, which is good because check takes about 3 days to clear. And when you think of how big the B2B market space is, about $1.5 trillion, that has immense pressure on cash flow for businesses. So yeah, slowly but surely we're seeing a massive improvement with how businesses are onboarding with digital payments.
Okay, great.
Sorry. One emerging, just to answer your previous questions about emerging mobile money and B2B payments, we're seeing an interesting trend as well that's probably not yet happened yet, but we're now seeing mobile telcos offering B2B on mobile money. That's number one. Number two, you're seeing telcos that are present in multiple countries being able to do merchant-to-merchant payments cross-border. So that's something that I think is going to be very exciting, especially for Africa, to facilitate cross-border trade. I'll give an example. We have a Kenyan flower exporter that gets inquiries from Senegal to buy flowers. How do they get settled? And primarily, that customer wants to be paid in M-Pesa, into their M-Pesa wallet, and you've got a mobile money and Amomo in Senegal that has Zoff. So this is some of the kind of emerging solutions that we are seeing in the B2B space, and we're really excited because we think that that's something that can be an African solution, because that's how we in Africa do business. We do business on the phone, on the go, and we need to connect with each other. So that's some of the emerging trends as well.
Okay, so that's interesting. So then how then does the Pan-African Payment and Settlement System, or PAPS, how does that come into play? What's the use case? How is it going to grow? What needs to be done to get it to scale even quicker?
Okay, so I'm going to be a bit controversial on the Pan-African Payment System. I think fundamentally the idea of connecting the entire Africa together on one payment platform is noble and well thought. However, we've got significant different, at the very basic level, central banks in CEMAC region, East African Payment System, which is Kenya, Uganda, Tanzania, real-time payment system, West African Payment System are fundamentally built very differently. There is significant different legislation that would capture whether it's AML, whether it's KYC, that. A Pan-African payment system needs to solve the regulatory element before taking out the technology, because we can have the greatest rails out there, but if we're still going to rely on the traditional commercial banks, because to be a member of the PAPS, you need to be a member of the banking system. Now, if the banking system gives me a layered AML on top of another layered AML, then I go to West Africa and I have to partner with another bank who gives me another layered AML. By the time I put a merchant on the Pan-African payment system, we've probably given up our liver and kidney. So I think that's my challenge. I think it's the legislation needs to be solved. The technology cannot work without the right regulations.
Okay, I would like some more controversial opinions, please.
No, I think I'm in total support. I think I have an opposite opinion. So perhaps if you're trying to pay a vendor in, say, Burkina Faso in Nigeria, it has to go out of the continent first to change to dollars, and it's sent to Burkina Faso. And what PAPS is doing is, as a Nigerian business, I can pay in Naira to a Burkina Faso business. So yeah, it's very noble, and it's going to take decades, right? But what PAPS is doing is very similar to what NIBS has done in Nigeria. So they're literally between two banks. So I send my instruction to my bank to pay a vendor in Burkina Faso, and they confirm, and they send instruction to a bank in Burkina Faso as well. So it's meant to be seamless. So I think that PAPS is incredibly important for cross-border payments. The potential is incredibly massive as well. And if they can make the same impact as NIBS in Nigeria, I think we're on for a game changer. Well, of course, the issue there is implementation and execution as well. Yeah. There has to be policy backing. Regulators have to come together to make this work. But I think we have enough goodwill across the entire continent to make this work. So yeah, let's see how this goes. But it's going to take a few decades to be optimized.
Amandine, thoughts?
Yeah, no, I was just going, I kind of agree with the controversial opinions in that it's aspirational, right? It's ridiculous that some of Africa's biggest trading partners are countries that are literally tens of thousands of miles away versus their neighbors. And I think one of the big reasons for that, yes, you can talk about visas and tariffs and the ease of doing business, but a big part of that is also just cross-border payment acceptance. And I think the conversation has to start at the regional super governmental level, which is what PAPS is trying to do. I think the devil is really going to be in the details and in the execution. We've already seen the Ghana-Nigeria corridor go live, although I don't actually know anyone that has done a successful transaction. But I think it's actually going to be on a lot of us as payment companies to see how we can leverage the infrastructure, because the central bank to central bank connectivity is always going to have to be done at that supranational level. But in terms of the last mile distribution, they will need to rely on payment companies like us. So I'm mildly hopeful. I think it's a very long journey, but I think it's at least a step in the right direction.
And then, Kamami, maybe you'll give us the non-controversial, but still, Amandine mentioned it's got to be super, super top level to start with. And obviously at that level, we're then talking about regulators. From your perspective, what needs to be done, what's been done well, and maybe what could have been done better.
So unfortunately, Jessica, I'm going to have to agree with my colleagues. I'm not giving you a non-controversial version, and I really don't have much to add that is useful. Safe to say that my experience, and I've been working in this market, I think quarter of a century, 25 years now, and the discussion, I mean, what Kevin has said applies as much to any part of the financial system that involves crossing borders, whether you're talking about payments. I mean, you just ask yourself why our securities markets, which are so small, are still in country, and it's really the same issues. So I just associate myself almost entirely with what has been said. I think ultimately, and Amandine, you've said something really critical here, we are seeing the presidents of Africa, and our former president, Uhuru Kenyatta, is really on record on this, stamping up the need for more intra-Africa trade. And I think ultimately, that is what is going to open it up. It's unlikely, and I don't think I'm a pessimist, I'm a realist. The central banks and the governments, do they really have incentive to unlock this? I think there's a lot of talk, but ultimately it's going to be the businesses pushing it because it's being demanded. That's my sense.
Maybe let me just add one or two things.
Only if it's controversial.
So I think for the idea is really great, but I think there are two major challenges, because first of all, they need to onboard all the central banks and all the commercial banks, and I don't think they've even gone halfway for even central banks, just barely 6 central banks or so, and still a lot of commercial banks for that to happen. And I think they're estimating maybe 2025 or 2026, but knowing how central banks are difficult to deal with, someone mentioned decades or something. And then after having to deal with that part of it, we still need to look at adoption. They need to be able to drive adoption. Like Amandine said, they will need to rely on payment service providers in the different regions to actually adopt that model of payment. So it's a long shot, but the idea is in the right direction.
Okay, helpful. I'm conscious that those naughty Web3 people took some of our time, so I'm going to do one last question, and then hopefully we'll have 5 minutes for some Q&A. I would suggest that everybody thinks of some really good questions. This is an elite business of payments panel here from across the continent, so tough questions is absolutely fine. Sorry, guys. So I'm going to ask this question out to everyone, keep it relatively short, be as bold and controversial as you like. But what have businesses so far missed when it comes to payments in Africa, and where does this leave us? Let's start at the end.
Well, have we really missed anything? I would say with every new maybe regulation or any new incident or atmosphere comes innovation. For instance, if you look at the last few years, fintech startups have always been innovating. Today you're hearing a fintech building something new, tomorrow you're hearing another fintech innovating, trying to build something new as well. So would I really say we've missed anything? Maybe not, but I would say generally the will to innovate within the market is really high, and I think that for us as an ecosystem is really good.
Okay, thank you, Yele.
I disagree. So I think we've missed a couple of things. A lot of fintechs tend to do the same thing, which is fair. The market is still very early. Paystack is 7 years old, and they're one of the biggest or oldest fintech companies. But what I've realized is that everyone is trying to focus heavy on the initial bit, which is collection. So how do you enable merchants accept payments online or POS machines, and how do you enable merchants payouts as well? But what happens in between that process, right, is still lacking. So, for example, now B2B and expense management and account reconciliation, we're seeing more innovation happen there. So some trends I'm saying is we're seeing more businesses trying to solve for account payables, account reconciliation, cross-border payments, spend management, and I think this is where the future of payments or future of fintech is going to be on the continent. We have to go beyond just collections, gateways, and lending, for example, and actually try to solve real problems for real businesses. So yeah, I kind of disagree with your point today, but yeah, that's my thoughts.
Kamami?
So I don't know whether it's really a question of missing or perhaps not fully appreciating just the opportunity that sits at this point in time. Because you're looking at both the opportunity that technology presents and the growing appreciation of Africa as a market. And I was looking at one of these WhatsApp things that circulated, which had a map of Africa, and then you had everybody else being put in there. I don't know if you've seen that. And it sort of just put it very visually for me as to what we are sitting and looking at just now. And as I think as technology grows and develops, for me, it's just a prayer that we embrace this opportunity. There is more that brings us together than separates us, and I think we're sitting in very, very exciting times. I'm grateful for those who've already stepped out and are having the courage to be in this space, because it's not a simple space, and I only hope that we have more interesting things to come.
Okay, thank you. Amandine?
Yeah, I will take your question and rephrase it and answer something slightly different. So instead of what businesses have missed, I think it's more what we've learnt and therefore what the opportunity is. And I think what we've learnt is it is really hard to build and to fix payments in Africa, and no two markets look the same. I think you had a question at the beginning about why are there silos, but payments by nature is hyper-localized and hyper-fragmented, and that is just the environment in which we operate. And so I think in terms of taking that knowledge and then building on it and the opportunity ahead of us, I still have that ideal that the Nigerian merchant needs to be able to accept M-Pesa instantly. I think our responsibility as payments companies is to facilitate payments within countries, across the continent, and then between Africa and the rest of the world. And we are literally just scratching the surface on that. But I think there is still a massive opportunity ahead. I think one of my favorite statistics is, Africa has 17% of the world's population, but only 2% of the people transacting online. So there is massive opportunity for all of us to coexist and to continuously improve the payment environment on the continent.
Very good, thank you. And Kevin?
I think I'll jump on her rephrased. I think
if you don't like the question, just rephrase it.
there's a humongous opportunity for African businesses to be very brave enough to compete at not only within Africa, but at global level. An African business today, it's almost impossible for them to get a global account based in the US or in Europe or in Australia. I mean, basically, there's no risk appetite. And that cuts you out of what you call a properly developed consumer market that has a lot more spending power, and you can be globally competitive. I think African businesses, that is changing, and I think it's the responsibility of cross-border payments businesses to fight that war on behalf of African businesses, to open these markets up for them and say, listen, you're in Zambia, we can get you into a European market so that you can compete with the European businesses for a European consumer. I think that's the story that now Africa really needs to fight, and it's the responsibility of the payments business, whether it's consumer, because there's both B2B and B2C, that we as fintechs and payment businesses need to win that fight on behalf of our African businesses.
Okay, thank you very much. Okay, any questions at all? Okay, perfect, because I think we're really out of time anyway. Thank you very much to this amazing, as I say, elite panel of payments experts. It was a pleasure. Thank you very much.
Thank you, Jessica.
Round of applause for them. Thank you so, so much.